What is up, everyone? This is actually the very first Ask Me Anything as a part of Magnum Opus, and this video and recording is going to be focused on 2024 top opportunities, taking questions on some of the reviews I've already posted, and happy to share my thoughts on why something wasn't a top op, why it was, what I think maybe some big misses of mine were, or even discuss what you guys thought were the top ops, and then also talk about really good goals for you all, what I think of productive, what I think of maybe process goals versus outcome goals. When is it good to have both? So with that, it's great to see all of you as a part of the community. I know some of the channels have already been very active on the community page. I expect that to really explode at course launch, especially once the free membership kicks off and everything else. There are people here from all over the world. So ultimately, thank you. I think you're all going to be blown away by what is left to come. And who wants to be the brave first person to kick it off? Otherwise, I am happy to start rambling. Any first people? Anyone going to be brave? Okay, so let's I'll ramble for now. Then you guys can interrupt me whenever we're ready. So I think my biggest this was always a weakness of mine. A lot of times I was very focused on capitulation trades and reversals. So I was really, focusing in on, say, like the MSTRs and stuff. And I would do a lot of reversals like that. One thing I wasn't as good at, or not as good at, but I wasn't as proactive about, I think some of the best opportunities really this year were some of the epic swing long breakouts, especially when the market was super hot. And by the way, I have a weird thing on my screen. You guys can see all this right now with my cursor and everything. Okay, Clayton's giving me a nod and everything. Okay, perfect. So I think like swing opportunities like this Tesla breakout are super, super amazing. I think swing opportunities long. So I think this Bitcoin setup was one of the best ones out there. And even stuff like the QUBT, like I think this was amazing long breakout. And then we can't forget, even though it seems like a lifetime ago, some of the breakouts in the semis, like SMCI from a daily perspective, some of the ARM breakouts, all of those were amazing. So I think if you asked me, Lance, and I think this is an important question to always ask in your reviews, if you asked me, Lance, how could you have doubled your P&L? I really think my way of doing that would have been going far more aggressive and being more proactive for the daily setups. And so one thing, I know I have a video about this coming up for Magnum Opus once it's out, but one of the big things is for spotting those daily setups. There's a lot of software out there. I use StockFetcher. I have no affiliation with them, but it is, I think it's like, maybe with inflation it's gone up. I don't know anymore, but I think it's like $150 a year, and was a really good piece of software for scanning chart setups and daily chart setups, that is. And at some point I'll probably go over those filters more in depth. So that's my little rant while we got a couple questions here. So one question from Mr. or Miss iPhone. My question is, what is the chance of potential for RGT in the coming days? Yeah, so pretty much the year kicked off with a lot of these quantum names, whether you want to talk about RGTI, whether you want to talk about Qubit, whether you want to talk about QBTS. All of these stocks are really interesting. And there's kind of two ways you can argue this. And so you could say, oh my God, like these stocks are down so much off that move just on one person's comments. Like, okay, big deal, Jensen of NVIDIA, he thought, he pretty much poured cold water on the whole thesis. Yet everybody knew this stuff was kind of far off and that these companies aren't making money. So you could argue like, oh wow, this is such a big down move that like just based on one person's comments. And then at the same time, you could also argue that like these stocks should have never been up there to begin with. Like RGTI had a multi-billion-dollar market cap, which is of course absurd. So the absolute best trades, in my opinion, are when you have literally no counter argument. So when we're talking about this question of am I interested in an RGTI bounce, first I must acknowledge that like the counter argument to that trade is like this stock should really probably be at $1 to $2 and it should have never been up there to begin with, which is totally valid. But I still get the thought for a bounce using the other argument. But anytime I can find a counter argument to something like that, I just want to be self-aware that I need to be careful, because both things can be true. This stock shouldn't have been up there to begin with, probably, but this is already a big down move. And so actually after hours into the end of Friday trading, RGTI was even down at $8. So am I interested in a bounce? Definitely, potentially. And so I guess the other thing too is, let me add the disclaimer that all this is not trading advice. This is just my own views and information to study and learn. None of this should be kind of inferred as a recommendation or anything. It's just simply my thoughts at the current moment of time that are going to change every second, minute going forward. So none of this is trading advice. I could be totally different opinions on Monday. But in general, yes, this is something I would start to be watching, with those kind of disclaimers. And so then the more important question is like, what would I want to see necessarily? So right now, this was a very big bar on, I guess it was Wednesday, because Thursday we had off. This bar is starting to get smaller. This bar was small. Friday was smaller than Wednesday. What I want to see on Monday is some form of range expansion. I don't want to see another super small bar at around $8 to $9. That's going to make me less interested from a daily perspective. If we start to get really small bars, I'm going to want to wait for the right side of the V and some type of daily chart break. The other thing I want to see is a huge, huge flush out off the open, or at least, as Johnny is saying in the chat, multiple legs lower and some really big price expansion. So, I mean, if by some craziness we started to really stretch down towards like $4 or $5, that would be super, super appealing to me. Like this thing, look, it should have never been up here, but does that necessarily mean we're going to go all the way back to $1 in a week? Very, very unlikely. So the further, you want to think about this like a rubber band, where the further it stretches, the more appealing that becomes. But I don't want to see price acceptance where the rubber band just accepts kind of that stretched position. Question on Fubu, but first let me touch on Dean. Dean said, can you speak about when you would consider swinging a short on RGTI, which turned out to be the correct decision this time, versus covering intraday as to not get squeezed out during some pre-market after-hour spikes? It's always hard to say when one should swing versus trade intraday, and usually I don't think it needs to be one or the other. I think it can be a mix of both. So I don't think there's anything wrong with, if you're able to short on that prior day, on the headline after hours, I don't think there's anything wrong covering some intraday into flushes and then knowing like, oh my God, this is a big catalyst on something that's super run up. Therefore, I want to give it prior bar highs. I don't think there's anything wrong with that. So my answer would be it's not one or the other, but I think it's totally fine to do both. Generally, when I do want to cover though, as a general rule, you do at least want a reason to cover. Maybe that reason is because we capitulate intraday. Maybe it's because we break trend. So all those are important. Low Float Stock asked, Fubu, let's see. I mean, as of right now, I don't have any interest in Fubu. Just because this is such a big move, I would really need this to consolidate and set up. What levels would I consider though? I'm definitely gonna have, if I would have an alert in at around 650, and so that means lower than it, of course. I don't want to see it at 650. I want to see it earlier. So I would still probably have this ticker on my watch list. So I see how this develops over a couple days. Certainly if this gets more fresh news or anything else, this could definitely go further, especially like this daily. So anytime I look at a stock, I also want to take in mind the big picture. And this stock's been big picture beaten down for a while. Like you can see that this stock was way, 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 way higher. So maybe it's one of those reversal of fortunes. So right now I'm not interested, but I definitely would be watching it for sure. And I'm generally, I mean, so here's actually, so I'm always interested at highs. The other place I'm also interested is if this starts to make like a little wedge, then I'd be interested at prior bar highs too. So Frederick asked, would you mind to cover BTC, the daily setup? One of the best daily setups you have seen. Let me see here, sure. So part of the thing with BTC, and I touched on this in that prior video, the beauty of this setup is we just consolidated for so long. Even on a weekly chart, this is a very, very long consolidation. And then we broke on a catalyst. So I love good daily setups. And I always talk about nuances and variables. Like a good daily setup is great. When you have a good daily setup that then adds on a catalyst that, or, it's moving on a catalyst and it's moving on insane volume. And this is something that has like a lot of kind of reflexive retail interest and feeds on itself. This makes it very, very interesting to me. I mean, and Bitcoin as an asset, just because the ranges are so good, it's probably something you should always have an eye on. This can really get moving and trucking really quick. So even still, like I'd still be watching this from a weekly, daily perspective and all that. But I mean, I think it's just one of those setups that you want to study where like we had this flush out, then it was just higher low, or sorry, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, then boom, it's gone. So I love setups that really coil like that. And this was just a beautiful amount of consolidation. MSTR, I felt like, yes, you can swing this long, and I probably don't do enough of that, but this exhaustion gap, it's man, oh man, so much of this I felt like was just the options driving this. And that's the beauty of what we saw in 2021 is a lot of these legs just kept going. And I think I did a pretty detailed review on this before. And if not, it's going to come out in a couple of weeks once the course is out, because all those top op videos for months are going to be released. But long story short, this 512 level, I think I did a Twitter post explaining that this 512 level intraday was the best, just because that was where you had Citron Catalyst, you had exhaustion gap daily, and then the intraday confirmed it. So Emma's asking, so with these swing longs, what is the best entry for those breakout type swing long setups? The dip before, right before the breakout, or the breakout itself? So as a general rule, not that I never break this rule, but I'm almost always waiting for the breakout itself. If you Google like, Lance Breitstein, No Man's Land, I have a video on this from SMB, and Magnum Opus is going to have a video on this as well. But I almost never want to, not never, but I very rarely want to trade in No Man's Land. So I'm always waiting for the break. This is a little bit tougher just because you had that election starting to become more and more likely. So my general rule is wait for the break, but there are definitely exceptions like breaking news, or if there's a really tight setup in here. So that's a good question. So Sam asked, how do you rate 2024 in terms of opportunities versus a typical year? So without a doubt, I think 2024 was the second best year I've seen. So call it like 14 years of trading. I think it was only second to 2020. Why is that? Because there were just, I don't know. I think it might have been one of the most consistently opportunistic years ever. There really wasn't a slow period. We really went from theme to theme to theme. Like I would say most markets only have one theme per year. Like 2022 was the inflation year. and CPI and everything's running hot, market's pulling back. 2023, I think it was Silicon Valley Bank in March, unless I'm confusing those dates. I think that was Silicon Valley Bank. Whereas 2024 just had endless themes. We went from semiconductor breakouts to euphoria to GameStop AMC. We went to the yen carry trade unwind. We went to Chinese stimulus, war in the Middle East, then the election trade, then quantum computing. So we just had an incredible amount of themes. Do I expect 2025 to be similar? I try not to forecast too much. And this actually came up recently, actually last week on the SMB, monthly review calls. I don't know that there's much value in forecasting. Like the way better skill set, rather than trying to have a crystal ball, is to just observe, then adapt quickly. So I'll really be paying attention to what is working as quick as possible and just try to adapt rather than prophesize. There's just so much complexity and randomness out there. I don't think anyone can have a good guess. So Yash, Yash, good to see you, Yash, by the way, was asking, how do you capitalize on RGTI on an intraday time frame? Well, I think that also defines, how you define intraday. I mean, so for starters, on 1-8, the easiest trade is if you're paying attention to the conference. Where are we? Is this 1-7? Oh yeah, it's the after hours. Yeah, here around where. So I think the easiest thing, of course, is if you're paying attention to the, oh my God. Sorry. There we go. If you're paying attention to the conference and you hear those comments, I mean, that alone is going to be huge. And by the way, you don't want to be so scared of chasing on any of this because these are so run up. As far as the next day, I didn't love the next day intraday so much. The best intraday op on this day, was definitely the LAES. LAES just had this epic flush out panic. So this was the best op, but then you got to be real careful of not fighting this stuff. Like this stuff is just so run up. It's just so run up. So I like any of these turns, I don't have that much interest in because of that. I want like the LEES setup. Yeah, and Sam, regarding that follow-up, like as far as how to prepare and expect, I think it's like, you don't want to have too many expectations. Your only expectation should be like, how do I want to perform and focus on my process? Like so much of what people should be doing in the start of a new year is focusing on their process and what they can do to improve. Like we have no control over whether 2025 will be good or not good, whether it'll be good for one strategy or the other, but we can control is how we're going to learn and adapt. So maybe all of a sudden, maybe the market will have topped and we're going to start to pull back some. If we're going to pull back some, that might be where you need to focus on short setups and short daily setups and maybe short swings. And if you don't have that playbook, then you just want to adapt and learn and document and study it. But I try not to overly worry what the market will or will not provide and more so focus on like, what can I do to get better? What's the most effective route that I can take? Tony B asked, how are you deciding to use options versus equity on these trades? Good question. Oh, and by the way, people, like if you want to like thumbs up some of these questions, that definitely helps me kind of sift through this stuff so I can make sure we hit any really big ones in case we run low on time. How to use options versus equity? So the scientific answer is it really depends on the prices of the options and how much volatility is baked in. The way more art than science is like in general, when volatility is super expensive, I generally want to be selling it. So like take something like RGTI. Like this was, I don't want to sell calls on like the first couple legs, But once we start to really, really, really go crazy, like you need to be so patient. Selling calls or selling any form of premium is extremely dangerous, but especially calls. So you really, really, really want to be extremely cautious. It is extremely dangerous. You want to do it very small size. At some point in the past, I did a tweet about, selling premium. I'm going to turn that into a video and flesh this out over time. But you want to be very cautious selling volatility. The issue with trading puts on a move like this is, first of all, this move happened, this gap essentially happened after hours. Then by the time we gap down like this, the calls were the puts were so expensive where it's like, because the puts were so expensive and the calls are so expensive, I don't really want to touch the options here. So usually for the most part where I'm selling premium, it's because something is already blown out. Like I want to generally sell premium when things have like the fat tails already occurred. So like in MSTR, I looked at the premium and the premium was pretty pricey. So for MSTR for the most part, I was mostly doing equity. So Matthew asked, how do you approach sizing generally when it comes to these daily swings, as you have the overnight risk versus intraday? So, I mean, you'll need to figure out what is right for you. In general, for any swing trade, you want to have way less size than intraday. As a general rule of thumb, you always want way less size overnight. There's so much more risks. There's risk of news. There's risk of, the market doing something weird. And ultimately, you just don't have liquidity. So there's just illiquidity and overnight risk. So my first thing is just be way more conservative. And, for the most part, it also takes a feel of experience of knowing just the volatility of these stocks. Like if you were swinging this long for whatever reason, like in a stock this beat up, like you got to be worried, or sorry, this run up, you got to worry about offerings and stuff. So it's not remotely that crazy that this ended up going down that far. So in general, I'm sizing way less. Beyond that, it's also going to just depend on the expected value of the play. And like some things are inherently more risky than others. Like how you're going to size a swing in RGTI is infinitely different because than take like doing a swing in the S&P, just because of overnight access to the S&P and just the liquidity and average daily range of that. So a lot of that comes from experience and building systems to protect yourself and seeing, like, especially if you're new, always side with being extra conservative. A lot of funky things can happen overnight, and there's a lot of tail risk out there that you often don't see. Lewis asked, could you explain what you mean by the options market moving stocks? So in general, I would say that, and I spoke about this kind of in that 2024 review video, but options trading has exploded over the last couple of years. What ends up happening is when people do a shit ton of options volume, anytime you're buying options, for the most part, there's options market makers. You might think you're winning against them, but you're not. They don't really take much directional risk. So if people are buying a ton of calls, a market maker might be selling calls to them and capturing the spread, but then they're doing what's called delta hedging, where they're hedging, essentially if they're short calls, they're short the stock. So then they buy the underlying equity to make them delta neutral. Most market makers are generally running delta neutral. So then though, as the stock goes up, and especially if we gap up, all of a sudden their deltas, if your options were out of the money, as the stock goes up, those deltas increase. So their short position increases, which means they need to buy more of the equity. And a lot of that can really drive these moves and compound. And that's my theory for why a lot of this stuff has been making the big exhaustion gaps. Somewhere on my Twitter, I think in response to my 2024 review, someone asked that question, and I posted a very good explanatory video that explains market maker delta hedging and gamma squeezes and stuff. How might I hold myself accountable to meet deadline/goals you set for yourself? I feel like it's a lot easier to slack when you're just accountable to yourself. So, I mean, I think this is a super easy, obvious answer. This is the benefit of a pod. And if you're still trading alone, you're doing it wrong for the most part. That doesn't mean you need to trade on a Discord or you need to trade in person anywhere, but you do want to operate to some degree as a team, even if it just means reviewing trades together, reviewing goals together. Maybe it's talking once a week, maybe it's every day, once a month. But for accountability, we are more powerful when other people know our goals and we become accountable to them and kind of just our ego. So first, I would be sharing my goals with the trading pod. I would be asking them to help me stick to them, and I would be helping them stick to theirs. The other thing is so much is about just consciousness and intention. So I would say for all my goals, I'm trying to put them into my into like my iPhone calendar and program as many reminders and alarm clocks and events as possible. So if it's like, okay, every Sunday I want to do a review with my pod, or every Sunday I want to do a weekly review of my trading, I'm going to have a calendar event in my iPhone calendar so that I see that each time. You really also want to try to make these goals just bite-sized pieces. So it takes time and effort to break them down, to set alerts and do all that, but it's very much worth it. But I do think that calendar alerts and outside people really help you stay accountable. Mike is asking, how much risk would you be putting on something like the MSTR short August 5th bottom compared to an easy money base hit? Saying maybe 1R for an average trade. So this question is I don't love these types of questions because ultimately these end up being very personalized answers. Like anything about risk, like the follow-up here, which got a lot of thumbs up, is what is the max percent of your account you would risk? And I think the more important part is like, and this even happened on the Patreon too, but like allow me to explain why these questions are so personalized and it's kind of like impossible for me to answer for someone. It's like, what is the max percent of your account you would risk? So let's say you have $10 million in an account and you have a family of 8 kids and your whole life savings is in your account and you're 55 years old. Should you risk 100% of your account? No, never. Do you even want to risk 50% of your account, even if it's an A++? No, definitely not. And let's say you're 55 years old with 4 kids and you have 200K in your account and you need that money. You might not even want to risk 20% of that or something. Now, vice versa, if you are someone that is, say you're 22 years old or 18 years old and your account is $500, like, well, the truth is, like, even if you blow it up, God forbid, you're going to bounce back. And, people do handle risk differently and people do handle drawdowns differently. So there's some traders where if they get in a 10% drawdown, their psychology crumbles. They've never been in a hole like that. And this negative feedback loop occurs. If you're someone very experienced, you're more resilient to that. So some of the variables that matter is, if your account gets super impaired, do you need that money and can you refill that account? If not, you're going to be way more conservative. How many dependents do you have relying on you? That's another factor. How experienced are you? Generally, as you get older and more experienced, you are able to size things more exponentially. If you're just like 2 months in or 4 months in, you probably don't even need to be worrying about sizing at all. You might not even want to be trading real capital. So it's a very hard thing to answer because what I say for me absolutely should not apply to others. But I will say that for me, like compared to an easy money base hit versus like August 5th bottom and MSTR, it's probably like, I mean, we're probably talking about 100x difference in bet sizing. And at the elite level, you get crazy, crazy stuff like that. Like most elite traders I know, probably like 5 opportunities make up like 80% of their year or more. But again, if you're a beginner or intermediate, that's definitely not going to be the case. So don't let what's normal for me be normal for you, because it's just not how that works. Yeah, so and Dean even had that follow-up. It's like the other thing too, right? Is like there's different styles of trading, and it's like if your strategy is very, very, very high hit rate, like if you have a strategy that's like 95% win rate, um, but it's maybe 1-to-1 risk reward, you can bet way, 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 way more on that. If you have a strategy that's a 10% hit rate, but it's 20-to-1 reward to risk, you cannot bet a lot. So like the issue with these what percent of accounts is like it just doesn't, it's impossible to answer because it depends the individual's risk tolerances, their psychology, their experience, their life situation, their strategies. So it's just not like, this is like the more important thing, rather than ask what percent, like you guys should be wondering what are the variables and how does one go about thinking about it. And that's what I'm trying to do. So that's why I'm talking about this. Like these are the variables you need to reflect on and come to your own experience. How have you handled past holes? Have you been in past holes? How did a 10%, 5%, 20% drawdown affect you? How would you feel in a 50% drawdown? How would that affect your life? Nobody can answer that for you. So yeah, so Dean, like 40 basis points, like I would argue, like for someone like myself, I'm not even putting that trade on. Like anything, like for the most part, I'm trying to think like, yeah, I don't know. For my account, like if I'm gonna I don't know, it really depends the person and everything else. So it's hard, I guess. Regarding creating a watch list and executing subs for the US market, can we also use it for crypto as well? Absolutely. So the cool part about the concepts that I'm going to be covering in Magnum Opus is, yes, I pretty much mostly focus on stocks. There will be some futures, there will be some options, there will be some Forex and everything else over time, maybe even some crypto given BTC, which I definitely have covered before. But all the concepts apply. Like nothing really changes for me. Like expected value is expected value is expected value. I always want to just go to wherever the best expected value is. So yes. So this question, is it better to wait for these kinds of capitulation and overextension trades, or find stocks in play for each day and trade it? I don't, a lot of times people fall for what's called a false dichotomy. Like it was one of those questions, I forget which question it was at the beginning, but what is a false dichotomy? A false dichotomy is like, oh, would you rather have chicken or mashed potatoes? And it's like, wait a second, it doesn't need to be one or the other. If I like chicken and I like mashed potatoes, I can have the two of them. And so it's not, is it better to wait for these or find stocks in play for each day and trade it? It's, why can't I do both? I think I would argue the best traders do both. And that's what I did. And especially if you have a large playbook, you end up doing both. So I was always waiting for the big home run setups, but I was also doing a lot of daily singles and stocks in play. So that's what I would call a false dichotomy. You can and should probably be doing both. If in the future we want to find and join a trading pod, what would be the best approach? So one, in the community channels, there are people forming trading pods in the community channels. Two, attending the meetups are going to be a great way to self-select and form a pod. The other beauty of that is like in-person relationships are always stronger. So if you can match up via geography, do some stuff in person, that builds stronger connections. A huge part of me doing the meetups and the community channels is because I know so many people are looking for these events, and it does take effort. But again, part of why I'm doing this whole thing in general is to create community, like a self-selecting community of traders that are like, if you ask me what is Magnum Opus, Magnum Opus in an ideal world is going to become the just default go-to community for real traders looking for real advice and real growth. Not any of like the lifestyle bullshit, the Furu bullshit, but just like, okay, these are traders actually working on their game. Let's self-select with community so people can can match up and find that. Frederick, transition phase in my trading journey, having focused primarily on crypto, but now expanding into stocks. And I think that's great. And I think especially on the internet, too many people have these unnecessary identities. I'm a small cap trader. I'm a futures trader. I'm a crypto trader. Like, as I touched in that 2024 review, like, it's not just me, right? Mango is, Moist Mango on Twitter. Amazing Kiwi trader, despite being a mango. He's actually New Zealand Kiwi. And he's fantastic. And just like I do, I think any top trader tends to go to whatever markets are offering the best opportunities. So there's nothing wrong with being primarily a crypto trader, but I do think you at least want to have access and capability to move around. Oh God, the voice. For all the people that are a part of the Patreon and have done these AMAs with me, everybody knows that every AMA just becomes a constant battle for me to not lose my voice, which inevitably happens by the end of the call, but everyone has to bear with me and it becomes comical and everyone just watches me suffer. So you're welcome, people. Johnny, I've been building a database from experience seeing things for many years. What I think about extension short plays, tracking the float and market cap on ideal extensions. So essentially, do I track the float and the market cap? Absolutely. Like, the bigger the float, not that this can't ever happen, but in general, the bigger the float, the harder it is for something to squeeze, and the higher the market cap, equally so. So these multi-million-dollar quantum names, and RGTI is a billion-dollar name at this point, and it has a pretty large float, but some of these are much smaller. These can squeeze way easier than you're going to get like a squeeze in like gold or oil or the S&P 500, because float and market cap definitely do matter. It takes just so much more incremental dollars to push something around. So yes. What should a new beginner trader focus on learning to accelerate their learning curve? As much as I would love to answer this, literally in 1 week when the course comes out, I have a video dedicated to this, and it's going to be better produced with visuals and other stuff, better than I can ever do it. So I'll postpone on that. Question from Eric: how do you balance how detailed to make your playbook versus making it easy to use? I would say it's more so finding the right balance for you. If you make it so detailed that it takes 20 years to read it, and it might not be necessary. But the most important thing, a lot of times, like, you can make a playbook super detailed, and even if you don't review it, you're still benefiting from that detail. Like, generally, it's still good to have that going on in your head and just doing the work. So I would say, like, as a rule of thumb, the more detailed, the better, but it needs to be sustainable, and it needs to be like, it still needs to be relevant to your learning. Like, there's a difference between being like effective and then just useless. So what's an example of effective detail? Talking about what variables make the play better. What's an example of just useless detail for the point of just like bullshit? It would be if you're like, okay, today, in your daily report card, today was a sunny day. I really liked, the smell of the roses, and later today I'm going to have a nice meal. Can't wait for dinner. Like, that's detail, but it's just not effective and not really really helping. 235th rooftop meetup. I don't know the reference, but on the 25th, there's going to be the rooftop meetup. So Monish, 1 year into trading, and my P&L pattern has been 90% of monthly P&L comes from 2 to 5 top monthly ops. So this is actually a great question from Monish. Most of my P&L comes from the top monthly ops. Would you recommend refining my easy money day-to-day ops or optimizing to hit the home runs? So you're gonna love this answer, but again, it's not one or the other. But I do think, especially in the beginner stages, you do really want to focus on the more consistent and more frequent easy money trades. And the analogy I give on this, which I was at some point going to make a video on, but I don't think I ever made this video. Let's say you're a poker player. Do poker players only play aces? Of course not. You know, they play way, way, way more hands than that. Why do poker players play more hands than that? Because other hands have positive expected value and they have higher frequency. And when you're doing other easy trade, like easy money trades, that lowers the variance on your trading. It also gives you more cushion to perform over time. It gives you more cushion, and that allows you to bet more on your home run trades. So if you only traded the home runs, going into every home run, you would have no P&L cushion. And if that trade goes wrong, you'd inevitably, be negative and take a big hit. But think of all the easy money trades as like playing, pocket tens, pocket jacks, queens, king, queen or something, jack 10. So especially on the beginner side, you want to generally be consistent and lower some of that variance by having good easy money trades. How can a trader accurately calculate probability of winning and probability of losing? So that it reflects true profitability. Ultimately, you can't actually. There is no way to get exact estimates. All you can do is just collect your data and backtest your data, which is not necessarily true. It's just based on a sample size. But that's what makes trading so hard. The more data points and the more data and the more time you have, that's how you build confidence, and a confidence interval for the statistics people around there. But ultimately, that's what makes trading so hard, is you never, ever, ever know the true probability and the true expected value of any play ever. All we're doing is estimating it. So that's what makes trading so hard. Not to mention the fact that these variables are changing over time. The probability of a breakout working and the expected value of it is different in a momentum bull market like we're in versus otherwise. So that's what makes trading so hard. Jero said drinking from plastic bottle. I definitely do not normally do this. And I definitely do have a canteen over there, like one of those hydro flasks. Because yeah, plastics are bad. I almost never drink from a plastic water bottle. Thank you for calling me out on this, because you take in microplastics for no reason. So thank you. I don't normally do this. Good call. For Lewis, 2024 was his biggest year and best year-to-date trading. Congrats to you. This new year, I find myself in a big drawdown. Also, congrats. That's part of the job, as much as it sucks. But the good part, so you discovered some flaws in your process. I would argue discovering flaws in your process doesn't suck. That's good. That's part of growth. And taking it as a learning experience. Yeah. So that's really what Lewis wrote in that paragraph. Like, that's literally all we can do. Drawdowns and rips and flaws in your process are part of trading. You will never have no flaws. And you will never have no rips or losses or drawdowns. It is an inevitable part of trading if you trade long enough. All that matters then is the mindset. You do want to make it a learning experience. You do want to be optimistic, and you do just want to grow from it. And that's going to be what matters. No trader has ever made it to 10 plus years trading without having faced adversity and drawdowns. Frederick asked, how important is it to have multiple setups and strategies when trading? Does it increase adaptability and long-term success? Or is it better to focus on mastering one approach? Yes, having multiple setups and strategies is useful. Does it increase adaptability and long-term success? Absolutely, because there's different markets and different strategies that are good for different markets. So if I am a really, really good IPO trader, but I'm in an market where there's no IPOs, I'm not going to make any money. If I'm a really good long momentum trader and I'm in a market that's only going down, I'm not going to make money. So what I say is when your market is in play, you definitely want to push it and master it and go, 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 go. But then there's going to be times when what you're best at isn't in play, and that's when you want to expand. So there's times to focus. And again, this really is like another like false dichotomy. We don't need to just only master one approach or focus on diverse strategies. We can do both. There's times to really push your best strategy when it's in play. Then there's times where if your strategy is not in play, hey, let's diversify a bit. So we can definitely do both. I mean, this is an important question. What's the best? So, like, especially if you're someone that fights burnout and struggles with burnout and have been doing this for a while, you do want to work into your annual goals and focus on, like, how can I better recover? And if you're someone that isn't remotely thinking about recovery, you're probably under 25, which I wish I was you. And B, you're probably leaving money and performance on the table. As much as the average type A person does not want to think about recovery, it is actually quite important. So the best ways to recover, I mean, these will also depend on the person. For me, I think unplugging is at some point is non-negotiable. Like if I'm going to do some reviews on Sunday, then Saturday I will not like Saturday was generally the second I left on the office on Friday, I was done on Friday. Saturday, I would do nothing. I would not look at email. I would not talk about trading. I would not think about a chart. Sunday, I would do my session, then I would recover. So I think some good ways is to leave some just non-negotiable time where trading is just not remotely a part of your life. I find getting outdoors to be amazing. I find nature to be amazing. And I find just hanging out with friends. Especially if you're just a home trader on your own, it's good to just socialize, interact, and take a step away. Good sleep, as you mentioned, is super good. Exercise, if you don't burn yourself out too hard, is another good way of recovery. I think saunas, I think spa, I mean, whatever you like and you enjoy and just fulfills you. Especially if you're a trader, you pretty much need to work the Monday to Friday. Which means you really should be using the weekend to enjoy all the other parts of life that don't revolve behind a computer. Yeah. So low float stock asked, do I think a stock with higher market cap, let's say, and higher institutional ownership are more likely to be manipulated? So I don't believe in the word manipulation. Manipulation does not exist. There is nobody manipulating this stuff. If so, tell me who they are, because I have no evidence of it. Markets are always the aggregate of thousands of individual participants. So I mean, can you get what I say? Can you get some weird float dynamics in small cap, like locked up float names? Absolutely. We've seen tons of stocks that are, we've seen tons of stocks that just don't have much float and can be squeezed, but I don't consider that manipulation or anything. It's just people are buying it, whether it's based on technicals, this, that, whatever, and everyone's acting in their own independent manner. But I do think the higher the market cap and the more float and everything else, I do think, no one's really going to be doing, weird things with the S&P 500. So I get what you're saying, although I just take issue with the word manipulation, which is just a very vague and who knows what word to begin with. Should we try to join SMB, or would we have more similar results here? Nothing will ever, 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 ever duplicate the power of environment. And in my opinion, I mean, this is just my opinion, but I don't think there's ever any better environment than being at a true professional firm, especially in office. So I do not, I mean, who knows about results one way or the other, but if you can, Like environment is so important. I can't stress that enough. Like in pretty much every aspect of life, whether you're trying to be happy, strong, healthy, a good trader, whatever, environment is just gravity, and you want gravity in your favor. And the more you can get your environment to replicate the environment of a professional firm, the better. What does that mean? That means being surrounded by traders with edge. That means being surrounded with good mentorship, having the resources and access and capital to trade all sorts of markets, having a workspace that's truly dedicated to trading where you can focus and have all those micro interactions. All that is so important. So I am a huge proponent of just any professional trading firm because environment is so important to me. I do not think I say this comes up many times in the course. I do not think I would have succeeded were it not for me being in a professional trading environment. Mark P, what tool do you recommend us to use? Does it include for back testing? What does it include level 2 simulation as well? I don't. So I do have some videos on back testing. And they're going to be out. Really, I think those are done and going to be out next week. So I don't want to cover stuff that's just going to be covered, but I would also say like I don't have any recommended tool either. I was using generally proprietary software, which there's nothing that crazy, right? There's software online, or you can do it in Excel, or just do it manual the old-fashioned way. And how much time to do, like how much time would you recommend for us to study? There's no right answer. Again, it's going to be so much of the course, and any advice I can ever give is teaching you all how to think to find the right answer for you. So, I don't know if you have if you're 40 with 5 kids and a full-time job. I don't know if you're 18 with 0 kids and you have, you can do 80 hours a week. So it really depends. How many charts should we backtest first before you execute it live? I touch on this in the video. The short answer is there's no perfect answer, which I get into in more detail, but I generally want at least 2025 just charts. And also, of course, there's nothing that stops you from just doing it in demo and then forward testing. Let's see, Daniel. One of my 2025 goals is to improve my profit loss ratio because I have a few large losses that are skewing my P&L. I realized, okay, yeah. So one thing is at the end of each year, you always want to just dissect your data. So what Daniel said is super important. Like he looked at his data, he didn't love his profit loss ratio, and he found that his profit loss ratio was skewed by a few large losses. That might not sound good, but that's actually an amazing position to be in, because if you can just change those couple losses, you can have a very outsized impact. So that's actually one of my favorite things to see in data. Like if you can say, okay, 5 trades are costing me 10% of my P&L, all you need to do is figure out how to avoid those mistakes in the future. So that's super, super, super important. Then you want to look for patterns within those. For example, how did the right side of the V and waiting for the backside come about for me? It came about because I think around 2017 or 18, I was going through my data, and what was preventing me from really dominating at the firm was that I was losing so much on the front side of trades for no reason. So I found that from looking at my data and synthesizing the commonalities of my large losses, and then finding finding out what I was doing wrong. So that's super, super important to do that analysis. And then I would just figure out like what happened in each of those losses, build a system to fix it. But that's really good work. What type of trading will most benefit from Magnum Opus, or what will we focus more on? Definitely not fundamental, but I would say it's none of that. It's the whole course is just teaching you how to, well, I would say none of it, but all of it. It's just teaching you how to think about trading and build a framework for how to get better and be your best. So, I mean, all of any strategy out there, it applies to. Let's see. You mentioned earlier that you will upload all the videos you have to the platform on January 21st. Um, so Trader Fab asks, how would I approach all these videos? Because once the course comes out, like even if we don't hit our goal just because of the wildfires and we kind of got, messed up because of all this, it's still going to be in totally inundating amount of information. The great news is one of the videos that is ready answers this exact question. So I literally, in the intro chapter, there will be a video that says, how do we go about doing this? And so that video is going to answer that better than I can. So one question, what are some day-to-day best practices in addition to the ones you've mentioned, like DRC write-ups, pod reviews? I mean, obviously there's watching your highlight reel, and a lot of this depends on what type of trader you are. Like if you are a news trader, you're going to want to do some, reading over the news stories. You're going to want to do some catalyst prep. If you are an IPO trader, you're going to want to do some studying like that. If you do, there's just, if you do some momentum stuff or some quantitative stuff, you might want to do back testing. So it's not like it's so much. It's like, hey, what's going to be the highest return on investment of your specific time, and you asking that. Because if you're someone that's more quantitative, sometimes the best thing you can do is just data, or depending on your situation, sometimes if you're a good programmer, maybe there's like automation benefits. But the more important thing is for you to reflect on your own trading and say, hey, where's the lowest hanging fruit? Like that was a question that I was always asking myself, at least every month. Like, where was the lowest hanging fruit in my trading? Like, if this is my P&L, what could I have done to make it to just be way more effective? Well, in the easiest manner. Because there's a lot of ways to improve. And I always want to say, like, how can I improve the most for the least amount of time, right? Because at the end of the day, we only have so much time. Question on refining your playbook. And he's making the point that his playbook has a bunch of layers, the category, the catalyst, the setup, the trade/execution. I think that's a totally great way to organize it. He's reviewed and archived in a Notion database all those tags last year in refining and master notes. Overall, I would say what you wrote makes a lot of sense. I really like that overall, and most importantly, like this seems like it works for you, and it definitely seems to make sense to me. So I think what you're doing is great. I tended to do, and I do have some videos on this too that I think are ready and will be up at release, where I kind of go through breaking down like the Evernote, but like I would do a lot of categories, and I wouldn't go super nuanced, but it would be like, okay, my IPOs, my imbalances, right side of the V, maybe like, bouncy ball setups, maybe, swing trades, overnights, news catalysts, and then just break it down via tags from there. If you're an individual who's seeing trading consistency and is able to replace their W-2 income, at what point would you quit your job? So again, I can't really answer this either, because it's like, again, if you're someone that's 22, that's going to be way different than if you are, a 50-year-old father of four, with, and again, it's like, I don't know, do you have $10 million in savings, or do you have $10 in savings? So there's no way to advise people. But I would say that, like, oh God, the voice is going. It's so important to you want to have a very strong war chest. If you like, the learning curve is long for trading, the bumps and obstacles are never ending. And so you do want to be very comfortable with your runway. So like I would at least want as much data and comfort so that I know, hey, I've like, if you don't have at least a year or two of runway, I think it's not great. I really want a lot of runway. Here's an interesting question from Dean. What were the main differences you observed between Trillium and SMB? Have they made a major push towards more automated strategies, or is discretionary trading still the majority of the focus? I would say for both firms, the majority of the focus is definitely discretionary. Trillium doesn't really do anything automated, whereas SMB definitely does more automated. SMB does much more quantitative backtesting, automated coding, and discretionary. Trillium is very, very burrowed into their niche of just trying to be like the fastest, best intraday traders. So I would say Trillium dominates a very, very small time frame. They are very fast and generally holding seconds, minutes, hours. I would say SMB is generally holding minutes, hours, days. SMB overall, I would say it is much more bigger picture stuff than Trillium. SMB does also much more team focused. Like the SMB is really built around teams, and you kind of operate as teams and groups and joint accounts and everything else. Trillium is very individualized. Yes, you have a mentor, and yes, you're in a group, but it very much is you performing as an individual. There's pros and cons to both. I don't think it's fair, and this isn't me just being political. Like I don't really think it's fair to say one is better than the other. They're just different, and they're going to really be, one will be better for certain people, and one will be better for other types of people. So that's how I think about it. But both great. No ill will anywhere. I love everyone on both sides, and a lot of amazing traders. Very, 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 very different traders on each side, which is pretty cool to see. And it's so cool that I get to see. And that's the beauty of trading, and that's what got me into trading to begin with, was reading the Market Wizard books, because there's just so many ways to make money out there. Like you have people that are fully automated at SMB, then you have people at Trillium that are just like the cutting edge of the fastest humans on Earth trading pretty much. And it's like both, that's super cool that just all of that exists and everyone can win. From Rick, one strategy that's the most profitable in 2024. I'm debating if I should work on improving it so I can size up that one strategy, or should I work on improving other ones? Again, this is another one of those false dichotomies. Like when your strategy is in play, you definitely want to push it and work on sizing it. But to your point towards the end of there, like if your strategy isn't really in play, you definitely need to focus elsewhere. And the other thing is, it's not one or the other. Like what stops you on a trading day from writing up and improving on your strategy, and also databasing stuff for new strategies? It's with so many things, it just doesn't need to be one or the other. And oftentimes it's a mix of both. So often I was still working on refining mine, but I was always open to learning. I'm still open to learning. There's a lot of cool different stuff out there. Well, maybe I'm less open to learning now just because I don't dedicate much time. You're only one human at the end of the day. Michael C., how many stocks do you typically have on your watch list on a given day? On average, I would say 5 to 10. On a busier day, definitely more 10 to 20. Never more than 30. Like I just don't think a human can very well monitor more than 30 on a fast time frame. If you're doing like a daily time frame, like if you're swing trading, you can run through 200 charts at the end of the day. But yeah, for me personally, I would say 5 to 10 I was watching closely. How do you know the type of trader you are if you are just starting out? That's a great question, because it's an easy answer. You don't. You only find that out from experience and being open and trying things, and just being, the more important thing if you're starting out is to have beginner's mind. Just be open, observe, document, take down a lot of charts, reverse engineer, ask questions, and just find what starts to make sense to you. Because there's no way to know, and that's part of the exploration. How do you know like what type of, what position you want to play on a sports team? You don't know until you kind of just fool around and see what you like. Um, what are my goals for 2025 and how will I track my progress towards achieving them? So, I mean, at this point, I don't really have, because trading is just not as big of my life as it used to be. Most of my goals are much more just life focused. Um, and maybe I'll still publish these. I've been kind of slow on this, but every year I pretty much do. So as a trader, I would have, let me take a step back. When I was like actively trading, every single year I would have very dedicated trading goals. I would probably spend a couple weeks making these goals. I would review them with mentors, with friends, with pod mates, and I would have really specific refined goals that I wanted to achieve as a trader. In addition to that, I would have a whole other set of goals that I wanted to achieve just as a human being. Okay, like maybe it's health related, maybe it's friend related, maybe it's relationship related, maybe it's wealth related. Fast forward to today, like sad as it is, I should not be, a good role model, but like my trading's just not my priority. So I mostly only do personal goals, and those goals and those will really revolve the most around health, relationships and friendships, and then also like fulfillment and making an impact. And not so the wealth and trading stuff is less important to me, but how do I track them? A couple things. Like even for me, if I can put stuff into my calendar, I'm definitely going to do that, especially with the reminders, the alarms, and everything like that. So even simple things like right now, I'm at least for winter in the same location as my brother, which is fantastic. So I generally am trying to make it a habit to see my brother on most Sundays. I saw him today, which was great. And so I have that on my phone to, just make plans and do that each week. Um, and so the other thing too is I'll also set alerts to just touch in, even if it's like once a month or even once a quarter. I do at least want to read those goals. I think it's also great to print them out. I used to always keep my trading goals on my desk and my life goals on my just kind of bedside table. So I'm always just like at least kind of they're in my sight, in my mind, and I'm always trying to um, be aware of that stuff because I'm one of the like look I'm probably a little bit crazy and I am very analytical and systematical, and for me I think the people that get the most out of life are those that go through life with intention, and I think goals help me be more intentional, so that's kind of why I like them. um I'm happy you are so excited, Frederick. I think most people will be just blown away. What I will say is no one can I know this sounds like just bragging, but nobody can comprehend the amount of time and effort that went into this course. This was easily one of the most painful processes I've gone through. It was just ridiculous. Uh, do I one other thing, like one of my friends asked if I regret making the course. I definitely don't regret it because I think it's just going to be an awesome legacy thing. I do regret the timeline a little bit because there were really two big things we wanted to do. One, we wanted to hit the start of the new year, and then we wanted to do a pre-sale for Black Friday. So that put us on a timeline that was probably like a couple months too tight. So it did end up being extremely, extremely, extremely stressful and at times very unpleasant for me. But no, I'm very proud of what we built, and yeah. So no, it's I'm excited. DV, with regards to the big picture of the stock market sentiment and all that stuff, news websites, what do I like to consume with regards to that? I mean, I think just Twitter is always pretty comical, and like a good indicator of when people are getting too hyped up one way or the other. But if I had to choose the absolute best, I think CNBC is a really, really good indicator. Um, of just what the market is focusing on, what people are thinking about. So CNBC, like especially if you're trading in silence, don't underestimate CNBC. It's just you can learn. CNBC is actually amazing programming. It really is. Like you can learn so much about different stocks, sectors, catalysts, and just the market at large. I highly recommend listening to CNBC if you're listening to EDM or just nothing. I highly recommend using your time that way. What books impacted me most? Yeah, Atomic Habits definitely. If I could have ever written any book, that would have been my book because it rings so true to my everything I learned through experience. Um, I'm happy to hear that I recommended it to you. James Clear, for the record, James Clear does owe me a lunch. Um, I have not yet been able to collect on that. He's owed it to me for maybe 2 to 3 years now. So with interest and inflation, he might owe me 2 lunches, and you guys are witnesses. Um, Other books that impacted me the most, Why We Sleep. That's when I really started saying, "Holy, oh God, I don't know if I'm going to curse on these yet." Um, I'm going to try not to curse on these. Usually I end up cursing. So holy shit, I don't think that's a bad curse. I almost dropped the F bomb. Why We Sleep was a big wake up call given the life I was living. I was working really, really hard, burning the candle at both ends. I was also partying very, very hard. Especially in your 20s and in a city and trading, you can have your fun partying. And I was like, oh boy, this is doing a lot of not good. I also enjoy books on Buddhism. And I also highly recommend Die with Zero. Die with Zero is less about like giving and oh my God, philanthropy, and more so about different chapters in life and taking full advantage of them. So like, yeah, those are definitely up there for me. Outlive just by Peter Attia because I love the health stuff. Those are all really good. And the Market Wizards. I mean, the Market Wizards got me into trading. Um, in the future AMA, can you please show us your winning and losing trades, also your entries and exits? What kind of setup? I mean, this is pretty much what a lot of this is. I mean, so here's the issue with doing some of that is like, one, if I don't trade a trade, that shouldn't really have any bearing. And two, if I lose in a trade, like so many times people are like, it's not so much about what I do or don't do, but more so like what should one be doing? And that's really what I try to focus on. Um, but this is also exactly kind of what I touch on in the top opportunities videos, where I do pretty much break down what I think the best opportunities were, what kind of setup it was, what were the entries and exits. Then even as far as the question, how to watch list some of these tickers. So I do have a video that will be out and is already polished and everything else on how I tend to spot like 90% of trade setups. So that is all going to be covered to some degree. Let me see. So AMD. Oops. At what point would you say AMD has capitulated and look for a potential right side of the V? So, I mean, I'm going to have a video. So this looks like it could be one of the big trades this year. I mean, I don't try to prophesize anything. Like I have no view on anything. I just trade what's in front of me. And I would be cautious of having like you thinking that already shows a bias beyond the setup. And it's like, I don't want to really have too much bias. I just want to be open to what's in front of me. As far as like what I look for in a capitulation, in 1 week, I'm going to have amazing videos on that can do it better than I can. Especially my voice is already starting to go, so I want to be a little careful here. So this was a little DM question, but like, why is trading less important to me? Does trading take such a toll on you that you have trading aversion? Oh God, my voice. Or did you hit your financial goals and are content and money is no longer the priority? So, I mean, it's a mix of many things. I do think that if you're like all in super gung-ho trading, especially the style of trading I now do nowadays, like a lot of the biggest opportunities this year ended up being overnight or at wacky hours. Um, I, for one, am very, very sensitive to health and longevity. My family has a pretty good history of dying and not at times when you want to die. So, just based on like just risk disposition and everything else, like I'm very attuned to, I could care less about money. I care infinitely about being alive and getting to experience life. And with trading, like especially if I'm taking it seriously, it affects my sleep and like my stress levels. You're sedentary, you're indoors, and even worse, like you're indoors and sedentary while taking on stress and adrenaline and everything else. And so I think for most people, like trading is incredible, and especially if you don't have any money, that first $1,000 is huge. That first $100,000 is also huge. The first $1 million is huge, but every incremental dollar becomes less important than the first one. And I would argue that at some levels of money, money becomes totally irrelevant to your life. I'm already at the point where I'm just every year I give away lots of money, so it's like, do I want to always sacrifice health for it? No. So I don't think that like I wouldn't say I have like an aversion to trading. Like I do find trading fascinating and I very much enjoy that. But the other factor too is I just like I don't know. I didn't want to always just sit behind a screen for my whole life. I think doing this stuff where I'm building, like without a doubt, Magnum Opus is going to make the smallest fraction of money versus if I were to just keep on trading. But like I don't want to keep on trading, alone behind a computer. Like this to me is infinitely like the nonprofit stuff I do, and this is infinitely more fulfilling and meaningful. And you're changing lives and you're interacting, and I get a different level of fulfillment doing stuff like this. Um, so yeah, I don't know. Sometimes in life, it can't just definitely when you don't have money, money is super important. But at some point, it's less important. And especially if the trade-off is a health thing. If trading was healthy, I would still be doing it. Probably at least some amount, but it's, like especially what I was doing where I was working, 60 plus hours, literally in 20, fun fact, by the way, in 2020, especially during COVID lockdown, because I was trading like 5 a.m. to 8 p.m., there were some days, not even some days, most days during COVID lockdown, I literally got outside 0 times per day and averaged like 300 steps a day, which is barely enough steps to like, grab food and go to the bathroom because I was just sitting at my desk literally 5 a.m. to 8 p.m. Um, that's not really how we were meant to live. So it's great at some point, but not forever. But I still love the field, of course. I do find all this stuff super fascinating. Um, Hey Lance, how can I be consistently profitable trader in the early stages of my trading career? Well, hopefully you're in a good spot, just consuming content like this, and mostly, ideally, I mean, really, what the course does, it's going to answer that question, and every video is going to answer that. So I won't focus on this too much, but just work on getting better every day. Try to find people better than you, offer value to them so you can get mentorship as best possible, and just always every day you want intention on how to get better. But the course is, I mean, this course was meant for people that want to do exactly that. Um, from Rick, if you focus on one main goal a month, how do you judge or assess your performance on that goal in order to start with another one? Um, so it's less about, he's essentially asking, when do you move on to the next goal? Um, it's less about achieving perfection, and it's way, way, way more about like what's going to be most effective for your trading. So you did the example. If my goal is position sizing and I execute well 90% of the time, should I stay on that or move on? So you always just want to ask, is this goal the most effective use of my time? If at any point there's a better goal with no feeling of guilt, you want to move on and always focus where it's most effective. So I mean, generally for the most part, if anything is like 90%, the probably like return, incremental return on that is probably pretty low. But yeah. Another person that loves Atomic Habits. So Odebek, good to see you actually. What can you advise to the trader that after doing one successful trade, hesitates doing another? So it's so funny that, like, the second I read this question, even before I read the IE, I hate giving back money, although I know I'm missing a good opportunity. 100% what this means is you're focusing on the P&L and focusing on the outcome, like, oh, I want to be green on the day, or I want to be up amount, X amount. This mindset, that only happens when you focus on the P&L. You want to train yourself to not care at all about the P&L and to instead focus on getting reps. And part of that is focusing on the process and a transition and reprogramming your mindset. So that's part of what the bobblehead concept is about. Instead of focusing on our P&L, we want to focus, how can I just get better the most each day? And so you want to reprogram yourself by recognizing every time you don't get that extra rep, you are actually hurting yourself. So yes, you might, you might not give back money, woohoo, but what you did is you just stalled and slowed your growth. So the best way to avoid that is by changing into that mindset and know every time you do that, you're hurting your growth. It's so important to focus on the process and just getting better. It's okay to give back money, right? And, think about this. If you're only going to take one trade a day, even though there's 20 opportunities, and I'm just making these numbers up, what that means is if your first trade is green, and then you then don't trade anymore, you're going to miss 19 more opportunities and you're going to grow 95% slower because you're missing 95% of the opportunities. So that's how I would start to frame thinking about that. When it comes to goal setting, are you for or against P&L targets? So this is a great question. So I've done a video on YouTube, and I think I actually have this as part of the course, repurposed. P&L targets, this is where it really becomes a factor of, are those P&L targets being adaptive or maladaptive for you? So there's some people that can set P&L targets and it's totally motivational for them. It's inspirational. It gives them just ambition to really push and work hard. But here's the thing, a lot of times those P&L targets can become maladaptive. So what I saw in 2022, a lot of traders crushed 2020, they crushed 2021. So then when it came for 2022, they had this really big P&L target. Then as a result of that, they didn't adapt. 2022 was not the year to press. So then they ended up underperforming, and you anchor like, oh no, I must have an X dollar a year. And you anchor to that. And as a result, you perform worse. And so like, it's more about how do you internalize that P&L target? And there's times where you can have a totally healthy relationship, but then it might change. Like if you're trying to have $1 million year and you get to 950K, then all of a sudden you're forcing trades, trying to hit that target. All of a sudden that's become a maladaptive goal. And you just want to say, hey, I'm canning this. If it's there, it's there. I don't want to force it. And I'd say that's also how people end up, even in weightlifting or whatever else, getting injured. If you're trying to force, I want some target or I want some goal, but your body's just not there or the market isn't there, that's when bad things happen. So it's really, how are you going to use it? I've done some P&L goals, but the way more important factor beyond that is whether you do them or not, you need process goals. You need process goals and how you're going to go about achieving it. What have you learned over the 15 years you've been trading that you think is super important that most people are overlooking, not paying attention to? I mean, I think sleep. Like, even though I'm a broken record, I think so many people just think I'm joking. Um, so I think sleep is super important. What else? And I do think that people still underestimate having a good process. Like I think people think when I talk about like the daily report card or this or that, I'm kind of just bullshitting them and hiding stuff. But it really is so important how you go about getting better. Um, Another thing that I think is super important is not burning yourself out and just listening to yourself, and making sure that you're doing a process that you enjoy. I see so many traders struggle. I see so many traders fail, and like it's okay to struggle. It's okay to fail, but you still like you only get one life. You don't want to be miserable the whole time doing it. Um, what are the different types of process goals we should be focusing on for each of the different stages? That's a pretty good question. So, I mean, I think the more beginner you are, the more playbook exploration there's going to be, the more general back testing, the more learning from others there's going to be. In the intermediate stage, and like especially on the beginner stage, like finding technology, finding the right layout, all that stuff's important. Intermediate, I think you then start to focus a little bit more on refining the strategies. You start to focus more on pushing size. You start to also focus more on risk management and psychology. The elite stage, I think that's where sizing and psychology really dominate. Most traders at the elite stage, I don't really see them expanding their playbook so much if they don't need to. They're not doing a ton of back testing. I do think they tend to do more kind of automating. How can I automate my processes and make my life easier? So I'd say at the elite stage, kind of like automation, sizing, and psychology, I think become really, really important. What other counterproductive goals have you seen traders make that we should avoid? At what point do people's goals become too specific? Counterproductive goals. I mean, I think it becomes counterproductive anytime you start to focus on other people or compare yourself to other people. Like, one of the most damaging things you can do is make this a competition between you and others rather than yourself and the market. So I think that stuff can get really bad really quick. I think trying to do a million things but accomplishing none of them can get really bad. Like I'd rather have someone figure out what the 5 most important things they can accomplish this year are and work one at a time. So I think also focusing on like prioritizing goals, like, okay, these I can really work on. These are little things I can bang out on the weekend, like working on technology or whatever. When do people's goals become too specific? Um, I don't know if they ever necessarily do. I mean, I think you could get so specific that it just like um becomes counterproductive if you're like, oh, I'm going to try and specialize in this one type of setup with these 12 variables that happens once a year, then you're probably too specific. But otherwise, I need to see examples. Do I think a standing desk is beneficial to help with the sedentary problem? Um, Maybe marginally, but I like as I get more down the health weeds, like I just truly believe that as humans, we were not meant to be indoors, and whether you're sitting or standing, like I still consider that being sedentary. Um, your heart rate is static. You're not using any muscles really. You're not really engaging yourself in any physical manner. So I'd imagine that standing versus sitting is pretty marginal, and that overall, like look, yeah, I don't think we need to run 18 hours a day, but I do think most humans today are indoors too much and sedentary too much. That's probably a pretty safe bet. um at what time am I going to offer a lifetime subscription? Probably never. Because I don't know what that would need to be priced at. A lifetime's kind of a long time. The other thing that's dangerous with a lifetime subscription is like, let's say I don't want to do this in 2 years, 5 years, 10 years, 20 years. I always want to give myself an out. And that out will just, if I charge someone 100 grand, then 2 years from now, I'm like, oh, I don't want to do this anymore. That's not really fair, to them. So I probably never. Yeah. Thank you, Dean. Appreciate, you as well. Um, the other thing too, because Vin's talking about some of this health stuff. I do think that, like, especially most traders are pretty young, and it's easy to underappreciate just that when you're young, you can get away with a lot of things. And I think a lot of people also, even when they get older, underappreciate this. Then by the time they actually do appreciate, the only people that truly appreciate health are those that don't have it. Um, and I think by that point, a lot of times you've already done the damage, whether it's from like drinking, no sleep, burning the candle at both ends. Like, if you start to have heart issues in your 40s or 50s, if you have severe weight gain or no muscle mass, it's way harder to come back from that and be like, oh my God, I have a major problem, than to just be healthy throughout life. And a lot of that damage is probably not so easily reversed. Um, yeah, good commentary, Todd. Um, how can you have the mindset of not focusing on P&L when you trade from a prop account with drawdown? I mean, you always need to be aware of P&L, of course, like especially if you have risk limits. Like, of course, we always need to be aware of P&L, but our goal should always be our number one goal should be to improve rather than to anchor on some P&L. So of course the P&L matters. Of course, we need to be aware of risk limits and everything else. But the point is, that as far as improvement, it's the process and getting better every day that really drives the P&L. What measures or systems do you have in place to evaluate the success of Magnum Opus students? That's actually a really good question. The short answer is none, but I would be pretty fascinated in this over time. I did do a Patreon poll, back, I don't know, probably like a month or two ago. The Patreon poll that I did was pretty encouraging. Of course, any form of polling I do is going to have biases. Like, it's not as if this is some proper, official study, but the data I collected was very encouraging, that a lot of people benefited from the Patreon and the knowledge, and a lot of those people, I think it speaks, to the quality of the knowledge and the impact, that so many people on this AMA right now are from the Patreon. And my transfer rate from the Patreon to Magnum Opus was exceptionally high. And so many people on the Patreon and now in Magnum Opus have been there the whole time. So that is encouraging and great to see and hear. And I love all the Patreon people because they are what led to this creation. So thank you. Um, um, so this is a question about living outside the US, video tutorial on brokers and how much capital we need. US citizens are most affected by the PDT rule. To my knowledge, that's everyone is going to be affected by that. So this will come up at some point in probably around release. But so I am going to end up. So long story short, this is the first breaking news of this. But Centerpoint, which was bought by Clear Street, they are going to end up being a sponsor of Magnum Opus to make the free tier pretty much free forever. And they enabled a lot of that because the production costs for this were mucho. And it's not just because, I'm very good friends with the founders of Centerpoint and a lot of the staff, and they just have the same value set as me. They're good people. So, is this a somewhat biased answer? Yes, but they're for good reason. But I'm not educated on the specifics around the PDT rule, and I'm not in a position to speak on that anyways. Um, what platform do you like or use? Support long, short, and also I mean, I'm hoping to do more on some of the software and stuff over time. What I really think, honestly, is just collect some of the recommendations from the community channels for whatever you're interested in. For the most part, I do like Thinkorswim charts. A lot of people like TradingView. I mean, as I mentioned, StockFetcher. Again, I have no affiliation. They're just really cheap and it's really robust. Then I've heard trade ideas. I've heard scans for some of the intraday filters. I've heard some people coding in Thinkorswim. I don't really, I'm just not an expert here. So, I would outsource that question to the community. Um, yeah, no strong views, but those are some ideas. Do I have any long-term investments? I do have a ton of long-term investments, all not that surprising. I mostly passively index into the S&P, real estate, all the traditional stuff that I think most reasonable people kind of do over time. I do not have any crypto. I trade crypto. Um, a long story and a long rant that I won't waste everyone's time on. Um, not making any statement on price. Like I don't, you know, I'm not bearish on crypto. Well, I mean, some of it is super dumb. Like some of the shit coins are just totally disgusting to me. Like again, agnostic to any price view, I do strongly feel that crypto was one of the dumbest things that the modern world has ever become obsessed with as far as resources and everything else. Um, I was involved in Bitcoin very, I don't know, like I was trading it since 2012 or something, which is a story for another day. But I don't really believe that Bitcoin has too many intrinsic uses or the technology. So that's a rant for another day that I don't really even, I don't even want to get on it. But no, I don't own any, at least any material crypto. Um, but I definitely trade and observe and have had small portions for sure. Um, um, what learnings in Buddhism can apply in trading? I mean, I think Buddhism is my general philosophy for life, including trading. Um, how can we be unattached to the outcome? Oh God, my voice is starting to struggle. How can we be unattached to the outcome? How can we just focus on what's in front of us? How can we be content with what is? And yeah, and I think a lot of Buddhism is just about like, hey, markets are always changing, just like we're always changing, and just it's okay. Like some people think that Buddhism is incongruent with having goals and being ambitious. It's not. You can still have goals and push to be your best, but it's also a lot about enjoying the process and don't be attached to any outcome. Um, at different stages of your career, what were your percentage returns like? Um, so that question literally does not translate in the prop world. I know people always want to ask that, but like that question. So in prop trading, like one, your BP changes whenever they want to give you more BP, and your BP resets each day. So unlike a traditional account that's growing and growing and growing, like your BP literally resets. And also the other thing is like, especially at the more experienced levels, like most of the time you're not using your BP at all. Like if you have 10 million or 20 million in buying power, like how many days are you really using 20 million in buying power? So it's not like it's literally like a non-compute. Like so when people ask for that, it's kind of just like nonsensical. Um, it's way different than if you're a portfolio manager and you're fully invested in your benchmarks like the S&P, great. But it just and also in trading, like, all trading firms have some degree of leverage. So who even, I'm not even privy to how levered the firms are, because that's up to them. But it just doesn't really translate for all those reasons. Like it's literally incalculable. Do I consider Forex part of diversification? Nobody really does much Forex. So no, I don't really view that as, part of normal asset diversification. Um, have I noticed mental blocks traders have when it comes to pushing size as the dollar amount gets larger and more meaningful? Yes, absolutely. Tons of traders have blocks increasing sizing. Um, what were some of the strategies I helped employ them? So, I mean, I have stuff like the sizing note card that I'm going to have a video on. The other thing too is like if someone's ever struggling to push their size, generally you just need to do it way more gradual. Most people that increase their size, like most people that try to increase their size, they do too much at once, then get injured and take a whammy and then pull back and it doesn't matter. Other people are too scared to increase it at all. And what you really want to do is like the best analogy is at the gym, right? If I'm trying to increase my weight but not get injured, I do very, very gradual improvements over a couple weeks, over a month. Most people try to do too much and get injured, or they do the same weight and they don't grow. So I think thinking of it that way helps. And then doing what I call the sizing note card, which there will be, I've done that video or at least a tweet before, there will be a video on that. So that's my tip there. Um, yes, being selective overall, Lewis, I do find the mindset of being a sniper is very good. Clayton. So, I mean, long question here, but Clayton's essentially saying that he's found that he does a lot of trades that are not most talked about on Twitter, but they have great daily setups. They often move slower. I was often the only one looking at the opportunities. Uh, I mean, if these are working for you, I would 100% trade them, 100%. And just because other people aren't talking about a trade, who cares? If it's a good trade, you want to one trade it. Anything with positive expected value, at least meaningful amounts, you want to trade generally. And don't worry about who is or isn't interested. Like if there's a good opportunity, I don't care who's talking about it. As a general rule, right? Just as a general rule, I presume that the absolute best opportunities have a lot of people talking about them on Twitter. But there's still tons of great opportunities that people aren't looking at. Like I would say probably every single day, there's at least one or two little plays a day that nobody's thinking about or talking about. So I don't think there's anything wrong with that. And no, you do you, and absolutely, if they're good, that's what I would define right there almost as an easy money trade. So you're finding your little singles and your layups and your free throws. And I love that they're slower, they're easy to capture, like good daily setups. You can probably scan for those. So I would be saying, how can I scan for these as daily setups? How can I set better alerts? How can I spot more of these? No, that sounds super promising. And I like that quite a bit. So no, you do you. And with a broken slot machine, like, look, that depends the person. Those for you, if those work for you, that's great. There's nothing wrong with that. Your trades don't need to line up with anyone else's. My trades don't, your trades don't need to line up with me or anyone else. Wait, how did I get back here? I thought I answered this question. Wait, I think I already answered a part of this. Yeah, I think I did. Am I crazy here? I answered that. What are the types of scan variables you use for your top opportunities? So this I'm going to get into in video format, and I don't even have it. So, okay, actually, let me just start here because I've explained this in a tweet. The absolute, in my opinion, like the most effective little intraday scanners that are insanely simple: stocks up the most percent, stocks down the most percent, and stocks doing the most volume versus their ADV. Those three scanners helped me so much pre-market. So that's a really good start given its simplicity. Might be beyond the scope of this. Let's see. Platforms like Thinkorswim are fine for tape reading. I think the Trader Rewind though often misses some of the data, so you got to be careful with that. In general, like I think it's best to just record your own screen with all the data. You'll want the level 2 box and the time and sales. Yeah. But no, it's totally fine and better than nothing. Is Bitcoin a money laundering device? Absolutely. I'm sure tons of people launder money with it. and definitely probably here in Miami as well, which no, I have no view beyond that. Um, is spirituality inconsistent with capitalism? I don't think so, no. Because I think there's a lot of amazing things in capitalism that actually do good for society. I mean, think what I mean, doctors make money, teachers make money, firefighters make money. Capitalism is just part of life, and trade and modern society. So I don't think it's inconsistent at all. I mean, I do think you can do things that are unethical at any job. You can be an unethical firefighter, which I don't think is, uh, well, firefighter, that would be a little bit hard, but unethical, business person or all types of things. And I think it's more so how you act and do you stay true to your values. Um, um, at Trillium, how do they keep top guys like you? At some point, do they stop taking any profit from you or just to keep you around to help others? No, they never stop. I mean, they're risking their capital. So I mean, it doesn't take much to keep a top guy. Like they have any prop firm offers like a real prop firm, not the bullshit ones. But like I mean, one they're putting their self and their capital at risk. They provide awesome software. They provide awesome environment. No, I mean everyone benefits, and that's kind of the beauty of it. Bitcoin a threat to banks? Probably not. If so, it would be have happened. How do you feel about trading the first 15 minutes after the open? I'm agnostic to any time. Obviously, less liquidity pre-market and after hours, but if there's a good op, I'm trading it. Um, uh, oh my God, I'm nearly at the end of questions, which is great because my voice always goes around the 2 hour mark. Um, am I currently living in Miami? Yeah, for winter, I'm gonna be here. How do I like it? It's there's parts I like, there's parts I don't like. Overall, like given that I want to be way more outdoorsy and everything else, overall I love it. Like I love being warm weather. I love running by the beach every day. I love doing pickleball, golf, whatever. There's aspects I don't like that I don't know, probably don't need to get into. I mean, the traffic is like I don't know. The traffic can be brutal, but overall, it's good. Don't need to do Chicago winters anymore, which is good. Now we're getting off the deep end by far. What are my bench and squat PRs? My best bench I did actually in January of last year. I did 315 at probably like I was probably like 170 pounds or something. My squat PR I kind of don't remember. I feel like I've probably also done like low 300 squat. I don't recall what the exact thing is. Besides Trillium and SMB, what are some of the other reputable prop firms out there? There's really not a ton. Um, and I mean some other ones I don't know about like ranking and I don't know how to order some of this, but I think you have stuff like Avatar, you have stuff like 7 Points, you have stuff like First New York, you have Chimera, um, but it's not as if there's like dozens of these firms. And those are firms that are providing generally 100. Well, it gets a little dicey. Some of those firms you do put up capital. Then you get firms like T3 where you definitely put up capital and they mostly provide the platform and leverage. Um, for beginner traders, should we sit, wait, observe for the whole trading hours? I mean, the more time you're observing, the better. I would say the more important thing is like when there's a trade going on or there's something interesting going on, you definitely want to watch it. Um, if you're not watching anything interesting, you just want to be doing review work and studying. You always want to be productive. Um, in addition to Magnum Opus, are there any other traders/free content similar to what you used to film with SMB that you'd recommend us? I mean, I don't think highly of most of the content out there. I mean, there's a very few select people I follow in the trading world. Um, I mean, I think like as far as videos, I don't consume much of the videos. I'm probably the wrong person to ask. I mean, I think Steve Place for educational stuff always has Stephen Place has good stuff, but I'm the wrong person just because like I do find that most of it is not great, and most of it is a lot of bullshit, which is most of these courses are bullshit, which is why I was kind of incentivized to do this. Um, right side of the V, there are different right sides. Um, right side after the bottom, rate of break of previous bar highs, break of previous bar high plus close above. What are your thoughts on those different entries and what has evolved to be your preference? This is a great question. There are different ways to define the break of trend, and I don't know if there's a right answer. And that's what I think, that's where it's like so good for people to just back test and find what's right for them. For the craziest, I have some video that's going to be part of the course that touches on this, but like it really depends on nuances of the setup. If something's mega capitulating, I'm not waiting for the break of previous bar high. If something's more steadier, I probably am. So it really depends some of the nuances, and I do have videos on that I touch on it. But then I would also say back testing helps you find that out. Um, um, you mentioned in interviews that you lost every month during your first few months. What was the turning point for you? What finally clicked? Um, I mean, I don't know that people always want to say like, what was the magic point? Like, it's so many micro changes that you're making. Like, it's like, oh, what was the thing that finally gave you a good golf swing? Well, it's like every little detail combines. So it was just making small improvements every day, making less mistakes, making more good actions. And then the other thing too is like, I do think our psychology, if you're just a new trader, you tend to do the opposite of what you should do. And you need to reprogram your basic psychology. What could I have done faster? I mean, it took me a while to figure out the meta learning stuff. All the stuff that's common knowledge now, like daily report cards, trade write-ups, and everything else, did not exist back then. So I wish I just had better process steps. That would have saved me a lot of time. And I got to the bottom. So, I mean, if there's any other questions, I might take them another 10 minutes, but otherwise, this is a pretty damn awesome start. I would say most of these tend to go about 2 hours. So this went about as expected. Um, any other things I can answer for now? Going once, going twice. Let's see. Oh God, of course you're gonna give me a killer hard question. I tend to make the same mistakes again and again. How do you get over that? So what I would say is like, that's everyone. And the first step to fixing any mistake is self-awareness and consciousness. And so actually, I'm going to have some videos with Dr. Katz and Dr. Tom Crawford, and we start to tackle subjects like this. And I have my own views, Katz has his views, and they tend to align. And it's like the first step is awareness and consciousness. And so like that's why having one daily goal and trading with intention is so important. Like, so whatever that mistake is, if I'm over trading and I want to be more selective, literally anytime I'm at the computer, I'm going to be thinking to myself, okay, be more selective, be more selective. Okay, only trade 3 bullets today, only trade 3 bullets today. And so a lot of that just happens from doing all this stuff and just making sure you make the change and you're just self-aware first of all. Then the more we can build systems to help prevent mistakes, the better. So maybe that's an accountability buddy, maybe that's a lockout, maybe that's different rules. But the first step always starts with kind of consciousness and then building systems or reprogramming yourself and getting reps. You can also, when the market isn't open, if you record your trading, you can of course then gain reps just on your trading videos. Like, so I would mistrade something and make the same mistake again and again. Then I would watch the video of me trading and I would retrade it just while watching the video and reprogram my thought process very intentionally. This might be one of the last questions I take. I trade the open and can't get myself to do more, afraid of over trading. And so again, like it's one of those things where the more aware we are of like when we're afraid, it's because we're afraid of the outcome and we're focusing on the outcome, and we're afraid to lose money. We're afraid to have a losing trade. We're afraid, and we internalize that as bad. And so much of that is reprogramming how we view that. Losing and getting reps, again, we don't want to lose any material money. We either want to be in demo or trading nearly small size, nearly nothing size. But what we want to internalize is reps and practice equals good. Not trading and being scared equals bad. And the more we can, like, if we're afraid to trade and take losses, we need to be in demo. Then once we figure out demo, we can then be in, trading one share or something. And you need to do it as gradual as possible, but you don't want to spend days learning the wrong habits. It's so important to always be doing actions that reprogram and give you progress. If I have a shitty golf swing and I go to the driving range and I swing that shitty swing exactly the same 50 times, I'm not getting any better. So we just don't want to have wasted days. There are a lot of thank yous. Oh, so this is one thing. This will be the final question. If we have a question that comes up during the weeks, is there a way that we would be able to reach you? For the most part, no, which is very intentional, because otherwise I just get inundated with infinite questions. And that's kind of the purpose of these AMAs. And look, like, I think eventually I'm going to need to figure out a good process for these, which might involve some type of upvote system. I also in the future plan on having these moderated. So someone is helping me monitor the chat and is kind of curating the conversation. But if I were to be fielding questions from the, I don't know, 90,000 followers of mine, I would never be able to actually create anything or sleep or do anything. So I try to create very important boundaries and barriers so that I can do, the important stuff, and also, have boundaries for my own sanity. So sadly, I try to prevent that. Thank you all for the many thanks. Thank you all for on Blind Faith being a part of the pre-sale. I hope you all are super impressed. I am always open to feedback, assuming it's kind of useful and communicated appropriately. Always useful to feedback. This whole course will be a living, breathing thing that gets better and better and better. So always let me know what we can do to make it amazing. Thank you all for the good faith. And I am so excited for you all to see what is coming in a week. Appreciate the attendance and everything else. Thanks, everyone.